Oh. Good evening. I'm Epstein, and here we are with your SPDR ETF stock market wrap-up. And this wrap-up is for the evening, as we're here now on Monday, the 9th of September, 2024. Well, had a problem, and still do. The vendors, one of the vendors that supplies the chart vendor that we use, we don't own the service, there was a change in the data stream, and everybody's working at it. When I come into the charts, I can get the current quote, but I can't call up historical. So I figured, what the heck, I won't miss this. I'll talk to you tonight, and we can just as easily talk about what the market is doing. They claim it'll be fixed in a day or two, and behind the scenes, I'm looking for another service that I could always have as a backup. Futures is not a problem. I have 3 backups. It's my SPDR ETF that is the backup problem for me. And I found one. The question is, I got to put a couple hours in the mouth to doing things and learning the system again. I've used it before, and I'm sure I'll get something done. So today was all about Apple, and the stock went up 9 cents. So Apple's big review today came out at noon Central Time. I watched it, and I walked away from it cold. And the reason I walked away from it cold is they want me to go out and spend between $1,000 and $1,300 on another iPhone, which is fine. The problem is the features that it works with today, right this minute, if you can get one after the orders come in, you can start ordering it on Friday, are about the camera and all the neat things that will do. Well, I don't need that, all right? We have a 14, a 15. The cameras are just fine. We're not professional photographers. It's not what we use it for, all right? It's nice to have it, but it isn't worth $1,300 or so for me. What I was interested in was the artificial intelligence and what it would do. And I don't know what it would do. And by the way, Apple hasn't told us what it will do. What it said is that they will make it available ideally in October. I don't know that that's accurate either. Think about NVIDIA. In NVIDIA, which today NVIDIA was up 364 to 106.47, they still don't have the Blackwell chip out, and that's what the next round of sales are about. Well, Apple's like that, so I don't see it. So for someone like me, until I can go into the store and see what the AI actually can do for me on that phone, I keep the money in my pocket. I let everybody go out that wants to buy it, review it, tell me the wonderful things that it can't do until it can do them. And then I'll go out and get the phone, especially if AI is really that super duper. The watch certainly looked like it's a big improvement. I can understand, but I rarely wear a watch. So I was left, for me, ice cold, just not that important to me. All right. So then I looked at the market as a whole today, and we had a bounce. But we've got to think about where we're at in these markets. Number one, and let's take a look at some of the data today because it is important. Drop here with me if you would. This was the afternoon's Federal Reserve Consumer Credit recap. It soared. They were expecting $11 billion increase. They got $25.5 billion. The consumers loading up the credit cards. The revolving credit soared by $10.6 billion, the non-revolving by $14.8. We've been going up steadily, but as it is, if you asked yourself what's going on, the share of the auto loan balances became at least 30 days delinquent, is the largest since 2010. That's just there. Then you look at the credit card debt that is newly delinquent and rose to 9.05%, the most in 12 years. So what's happening is the consumer is not worn out. They're just taking on debt that they're not going to be able to service. And that's a real problem because at 29% interest rates that a lot of people pay, between 21 and 29, all right, so a third of the money they're paying each year is going to be in interest alone. These balances can kill them as they keep loading them up. That's the thing you have to think about, and it gets very dangerous. So do I think the consumer is just going to be red hot? No. Do I know now why Costco's doing so well, Walmart, why they're not buying LVMH and so on? Well, you should say to me, the guy buying the LVMH, the Gucci and so on, he doesn't worry about that anyways. That's not true. To a degree, he worries too. The really rich don't worry. But what's really rich? You have to go that way. National Federation of Independent Businesses are coming out with their August Business Optimism Index tomorrow, and they'll do that at 5. And Redbook Group's going to update their weekly U.S. retail sales data on Tuesday morning at 7:55. All right? So, Boeing, well, you know that they've struck a deal with the heads of the union to avert a strike, but it now goes for the vote. Now, originally, the union wanted about a 10% increase in pay and benefits. When you break it all down, it's about 7%. The union accepted it because what you want isn't what you get. You know that. I know that. So we'll see what that does. Better pay attention to the friendly skies of Canada. The Air Canada and their subsidiaries are getting ready to go out on strike. Pilots there are paid on average 45% less than in the United States. So they're saying they want parity. Okay, new problems. Don't know that they're going to get that. When we look at Microsoft today, up, but not an interesting chart yet. I wish I could tell you that the charts today got super interesting. They didn't. Where the market's getting bids are in the utilities and the financial services, because as interest rates come down, those are the things that logically grow. We'll probably see the home builders, as they bottom out there, be okay as well. I'm watching inflation. Inflation should be coming down on CPI and PPI. And frankly, don't get caught up whether it's 25 or 50 basis points come September 18th. Doesn't matter. We're entering the rate cutting cycle. That's what matters. Whether the Fed goes 100 points and has to put in some 50s here or not, do I think the rush is there? I don't. Nothing's falling off the cliff. Inflation is coming down. You can't tell me the economy is caved in. That isn't the case. Labor has definitely not been as hot as it's been, but it hasn't collapsed either. 144,000 new jobs last week, and 4.2% unemployment is not the stuff that you talk to me difficult markets. So far, it is still a soft landing, and I am not convinced the Fed hits the panic button in a soft landing. Could they? Anything's possible. Will they say, well, maybe we get ahead of the curve by a 50 now and show the market we're serious? Or do we scare the market if we go 50 right now? Maybe we do that and save it for later. I'm still leaning to the 25 basis points because of that. But we will see. Saw people today give excellent reasons why they're going to go 125 basis points right now, between now and the end of the year. I accept their arguments, but I'm not seeing in the market what I thought. So I put it all together. I wish I could do the charts with you. I'll give them, I'm praying, got my fingers crossed that by Wednesday at the latest, they'll have this fixed. They told me don't expect too much tomorrow, but I'm not going to sit still. I'm going to get a backup service so I can do something for everybody. I'm Ira. You have yourself a great evening. I will talk to you all first thing in the morning. I can do the futures and the other screens with ease. Take care.